Ladies and gentlemen of the crypto space, we're live on a Thursday, August 5th at 11:33 a.m. I want to rehash a couple things. I want to go over a couple things. I want everyone to really understand what they're doing in the crypto space and the sense of financial management, portfolio management, and your self-fiduciary responsibility. We have opportunity overload in the crypto space, and I think that that is a reasonable assessment. That's my opinion. That's how I engage in the markets because I don't see any of this opportunity in legacy markets. It's just not there in the same way. There's too much friction in legacy markets. So, you know, I guess the idea that I'm trying to convey reduces to the opportunity is there, but the risk is there also. And a lot of folks, especially new entrants, especially folks that are just getting into managing their financials, are not prepared for the volatility. Now, folks that have been around, even in legacy finance, the drawdowns and the 18 and 08 and 2020, they're massive drawdowns. And in the crypto space, they're just as big. Whether they're transitory or not, whether they're short lived and price appreciation continues, is another story. And that means we have to stomach the volatility and have conviction that price appreciation will continue on trend. Price recovery will first occur and then subsequently it'll keep going. And, there's a component of faith in there, conviction in there. So how do you manage all this? And I mentioned illiquidity in the stream title, and that's probably uh, best representative of the NFT mania. It's definitely a mania. The price appreciation is significant, albeit there's reasons it's significant. So there's reasons to expect significant price appreciation. But when liquid assets aren't appreciating and you need to liquidate, the price goes down really, really quickly. Um, and that will trigger a variety of emotional responses. Can I sell? Should I sell? And you get into an emotional frenzy. Um, and it's not about just hodling and just having blind faith that everything is going to be okay and your money isn't going to be lost. Um, so these are real things that everyone will experience. Let me bring it over to the main screen. Let's look at some charts. Let's look at some stuff that I play around with. I got a bunch of liquid assets. Let's do this. The liquidity is fun to the upside and painful to the downside. Today's episode is sponsored by Change Angel, the non-custodial swap exchange for social goods. Stop depositing on exchanges, not your keys, not your crypto. Non-custodial DeFi or nothing at all. Bam. Let's pop it over to the main screen and see who's in the stream. Got Patrick in the house, Montana. Always a pleasure. Anarcho, Preach It, Sergio, Present, Killis. Yes, indeedy. You need more crypto. Hey, Noah, what's up? I'm decent today. Things are good. I got a lot on my mind. I got a lot of work I got to do, but I got to keep an eye on the financials. Um, so Ethereum and Bitcoin are obviously ripping today. Bitcoin, as you can see here on the daily, is above the 200 EMA, which is really nice. And as you can see, look at the current daily candle. It pretty much bounced off the guppies, and the guppies are starting to turn gray. That's really cool. Um, this entire everything since 60 grand, you had a little bit of gray, turned red, and now it's gray again. Looks incredible on the daily chart, and if you go out to the weekly chart, it never even turned gray guppies, which are like horizontal. The vast majority are green, which have a bullish overtone to them. And what was I looking at? Oh, check this out. Check this out. So if you denominate Bitcoin in M2, look on the weekly. Look at that. The lowest wick, well, the lowest candle body close was still above the bottom green guppy. Talk about bullish overtones to the chart. We only know how things play out in hindsight, but man, that looks good. And look, trying to break out of the guppies. It was rejected on the weekly last week, and obviously the weekly right now we can easily have a breakout, but the bears tried to have control. Now it's pushing up against resistance again, and resistance in this M2 denominated chart is the obviously the top of the green guppies. It's not necessarily a price action resistance, not a fib resistance, or not a moving at well, the guppies are a moving average, so it is technically a moving average resistance. But if you look, so looking at one chart doesn't tell you the whole picture, which is why we look at other assets. And the two macro crypto assets, obviously, are Bitcoin and Ethereum. Bitcoin broke out. Uh, Ethereum broke out. It's above. Was that the 0.236? Why does it not always not draw properly? Yeah, the 0.382, which is really good to see. So obviously, I drew my fib from basically the March collapse to our high, and that's how I drew it. Plenty of people pick different targets, but this is what I see, and above the 0.382, this is a breakout. And obviously now we're encountering price action resistances, and once you get past, 2,900, if we get into 3,000 range, we're heading into a territory where people would be encouraged to allocate capital. Um, Potentially thinking that there'll be a bullish continuation. And frankly, in many regards, it looks like a bullish continuation from the weekly. You got 3 weeks of significant green down from the bottom wick at 17.15 to 27.96. But things go down quick, boys and girls. And that's kind of the whole thing that I always like to remind everyone of. And, it's not that when they go down, we sell when they're going down. Well, if you're selling when it's going down, you're too late. Um, and that's kind of exemplified by the NFT space and just what trading is in general. The whole point of trading is to buy something and convince someone else to buy it from you for a higher denominated price. And obviously, we think mostly in terms of dollar denominated price. So these are very liquid markets, and when they become illiquid, boom, or boom. So the big green candles to the upside and the big red candles to the downside are expressions of illiquidity. We'll take a look at my NFTs because those are obviously extremely illiquid, and you get 800, 1,000%. It's like options. It has over or sentiment or feelings of options. You get 800, 1,000% in a day. It's crazy to think about. Who else is in the stream? Lucas in the house. John, good morning. Need more crypto? Thanks, Fast Food Punks. Yeah, Fast Food Punks is crazy. I'll go there in a second. I want to look at the S&P first. John, I've been out of touch for a month or so. Where are you involved currently in getting yield these days? Thanks as always. Yield for me predominantly is Convex, Frax Finance, and M Stable. Um, I constantly tempted to deploy more capital to FXS with their VEFXS lock, which gives you obviously 48% returns and boosted yield on dollar denominated staking positions. So my dollar denominated staking positions are Frax and Frax USDC Uni V3 pool. Fair amount, about 87. But its cap is cash. It's giving you dollar denominated yield, which is relatively small, and speculatively market conditions that'll be larger in the future, which would be nice. But the incentivized returns are very nice. No, I don't want to claim. Cancel. Cancel. No claim. All right. So FXS is a deflationary asset. So when the protocol, when it appreciates and they're able to when Frax is over collateralized, what the protocol does is it mints new Frax to restore the peg, and that new Frax is used to buy FXS on the open market and burn it. So it's a deflationary protocol. You can see how that works if you look in the documentation section down on the left. And it's a let's go out to the monthly. Pretty nice uptrend in locking. Let's go out. Is it a couple months, 3 months? There you go. So so that it's relatively new, May, and there's supply disruption. There's a burn component, and that's a significant amount of circulating supply. 43.81% of circulating supply is locked. Which locked is a little different than a liquidity because lock means it also can't be sold. So it's like invalidating a part of circulating supply rather than having circulating supply and it just not buying or being bought or being sold, which is what happens with the NFT space. So you need more crypto. Well, let's look at ES first. So this thing just goes up. I want to look at two things real quick, and then I'll go over to NFTs. Um, Bear with me a second, guys. I'm sorry. Someone's at the door. All right, goodness Christ. Sorry, guys. All right. I had the detailer coming to do the car, and obviously he comes at the worst possible time. So I wanted to look at SPX real quick, divided by M2, just for the fun of it. Check this out. But check it out on the yearly. So we're in unprecedented times. So the reason I wanted to show this is we basically have had zero growth in the securities markets relative to the amount of circulating currency units since 1960. So deflationists will point to obviously the insanity of the way SPX looks, dollar denominated. But if you denominate in consideration of the total amount of currency units in circulation, there's been there's been zero growth. So we're entering volatile times. It's either going to go up significantly, everything, or we're going to have some sort of insane liquidity event. And you follow Stephen Van Meter and Jeff Snyder to best understand um, such complexities, such deflationary pressures, such time bombs that are across the market. And I guess I point this out to remind everyone that things go up quick and then they go down quick. And how do I accommodate that? Or how do I think about that? I need to be exposed to the crypto space because it's the best way I could express my it's the most reasonable way for me to express myself financially because I understand the technology. I see the opportunity. I don't see the opportunity in legacy financials, which means an opportunity cost analysis pretty much requires me to allocate capital to the crypto space to respect myself, my opinions, my ideas, my ideology. Um, so that means I also am aware of the risks. And how do I accommodate those risks? Concentration. And as you guys are talking about yield, rather than looking for buy low, sell high, speculative opportunity. So everyone knows I prefer yield, especially on stable coins. So there's obviously risk, and the risk is compensated by the quantity of yield you're getting. You're taking a risk, and you're not getting 0.02% of the bank account. So this is a risk considerate place that I've allocated value based on my comprehension of the protocol. So there's risk in everything we do. There's risk walking into the street. There's risk in eating food from someone else that cooked it. So risk is part of life, and it's not something to avoid. It's something to understand. It's something to appreciate. It's something to respect, because risk can turn against you very quickly. And one way I think about accommodating risk is concentration. People think of diversification as a way to manage risk. On the contrary, I think of concentration as a better way to manage risk, because I have less positions that I have to manage, less complexity. I have increased conviction in where I deploy my capital, which means I also potentially have increased returns. And these are all good things. So I actually do the opposite of what many folks do. Most folks want to buy as much as possible. They see something they like, they need to own it. You can't own everything you want to own. Never go all in, never spread too thin. And personally, I opt for concentrated positions over small diversified positions. Um, my current position is pretty much unchanged in most regards. I did follow suit with FTX. They are liquidating their CVX yield. Um, I don't have a CVX position currently other than pending claimed rewards. And I haven't claimed in a while. So I'm just going to accumulate. As of right now, for a while I was eyes on convex and that the yield, and now I'm just going to let it sit back. Well, I'm going to sit back and just let it do what it does. I'm not too worried. My riskometer is in passive mode. And with these three particular allocations, it's a small position in M stable, which is about 30 grand, and GUSD. Of all risk considerate places to park capital in the crypto space, it's GUSD and the MUSD, in the GUSD MUSD LP position. GUSD is dollar backed, and MUSD is risk a risk considerate stablecoin, because it's a basket of stablecoins. This is what MUSD consists of. So if there's any excessive risk associated with any of these coins, it's not the entirety of the stablecoin's value, because the MUSD is supported by all of them. So it's only a portion that will be affected, a percent of the total price of MUSD, and it'll lose its peg, and then obviously arbitrage will regain its peg. People will sell and buy accordingly. And pegs are inherently reattained because of opportunity. People are able to sell something for a higher price and buy something for a lower price, so on and so forth. You guys know how it works. Um, all right, so we talked about we rehashed the risks of the crypto space. We understand what we're doing, why we're doing it. We're learning how we do it, and we're always getting better. There's no perfect way to deploy capital. There's only better, and we can do better. And I argue that I have to deploy capital to the space. It's a mistake not to. There's just too much opportunity, and if we don't explore opportunity, we get nowhere. So I think the status of the macro financial system forces us to explore the opportunities in this space from it, and we assess our risk accordingly, and we structure the way our capital is deployed so that we can be agile. We monitor our positions, we adapt, and stable coins are interesting because this type of stuff doesn't exist in legacy finance anyway. I have my eyes, oh, not on that. That's silly. But fast food punks has been crazy. Um, Need more crypto mentioned fast food punks earlier. This thing's up. Like the floor, I think, is like 3.5 Ethereum at this point. Um, some are selling for a little less than three, but there's your volatility. Um, if you think about what that means, if the floor yesterday, the cheapest fast food punk was about 3.5 Ethereum for a bit, but now people are selling them at less than that because they want it to sell. So they're making it cheaper. They're putting the asset in a position where people see it and they're like, oh, I'm getting a deal. But what that does is it basically drops the price of the assets overall. Wow, this guy sold his White Castle hat for 8. Pretty good. I sold a zombie for 8 earlier. but I have a fair amount of those zombies. What do they call it? What do the kids call it these days? I swept the floor. One, two, three, four, five, six, seven, eight, nine, 10, 11. I got still 11 of those zombies. I bought them for like a half an Ethereum. And now the floor is three-ish, three and a half, give or take. And that's pretty cool. So what was that? If I sold it at 8 and I bought it for a half, that's 1,600% profit in like a week. That's pretty cool. I got one ape and one alien. Folks are offering me 4. They gotta bump that up. I thought these were cute. Kitty butt. So these are the rare ones. So NFTs are interesting. Obviously, they're limited supply unto themselves. So Kitty Butt has 10,000. Fast Food Punks has 1,000. Curve is quite limited. And the value of all this stuff is subjective, and what is the value of it is what someone's willing to pay you for it. And you may never actually be able to sell it. And how do you and when you get into a situation like that, that drives the overall price down for the asset, because then you're dropping the price, dropping the price, dropping the price until someone feels that they're buying it for a fair value. And it's basically the barter system. And this is the way you know collectibles worked throughout history. This is the way Magic the Gathering and Pokemon and baseball cards, so on and so forth, all this stuff always worked. The difference is I'm broadcasting the assets that I have. I'm broadcasting the assets that I want to sell. I can engage in an auction. So the separate and apart from you know, the illiquid nature of the assets is the novelty of what NFTs represent from a platform perspective. Never before in history could I have a magic card in my hand and someone in China could be like, "Oh, that's a great deal. I want to buy it. Here, I'm going to put a bid on it." And then someone in India says, "I'll pay more." And then someone in Australia says, "I'm going to pay more." And that means we're just at the beginning of something new. So these aren't magic cards, but these are very illiquid assets, and they attach very nicely to the CryptoPunks brand while slapping on significant memeage with the fast food concept. So there's definitely virality going on associated with it. If you take a peek back, but everything I'm saying right now is far from encouragement to make a purchase of any of these assets. I took a very big speculative risk when I purchased these assets early, 0.65. What this alien for 3, and what an alien sold yesterday for like 66 Ethereum. 0.5, 1.2, zero point 0.5, zero point 0.5, zero point 0.5. So that was a speculative risk. When I bought these were the most expensive assets, and now, I guess they're still the most expensive assets, but now the floor price for the most basic of Fast Food Punk is more expensive than the most expensive asset I bought, which was this Alien for 3. So I guess I took a speculative bet. I believe I told everyone that I did this because the vast majority of the portfolio is risk considerate, yield bearing positions, and very hands off, passive types of positions. But these assets are very active. You really have to monitor the state of the market. You have to stay up on the Discord. You have to see what's going on social media, and as always, you have to understand macro financial conditions. Because believe me, if we have a significant risk off event, nobody's going to buy this stuff. Nobody's going to buy it. And that's going to be a painful position. So I did mention Magic the Gathering and Pokemon, and I, there's good reason for me to mention Gods Unchained. I think it's a great game, and you don't need to buy the cards. Obviously, I bought quite a plethora of cards last year, probably March, April, May, very early. So I bought them relatively cheap, and they've appreciated significantly since then. But Gods is coming out with the Gods token, and was it IMX? They have a couple of crypto assets rather than NFTs coming out. These are playable cards, so irrespective of your capacity to liquidate them and sell them, it's equivalent to a Magic the Gathering card. These things are awesome. The gameplay mechanic for Gods Unchained is basically, It's like a simplified online derivative of Magic, and great nostalgia along with it. The gameplay is quite enjoyable. So I get a kick out of this, and they're NFTs. So these prices are wrong because nobody really buys Gods Unchained on OpenSea. To see the prices, you really want to see it on Immutable X, which is the Immutables marketplace for their assets, and it's L2, so it's all basically zero gas fees, which is really nice. Um, Joe, he's an alien home in his spaceship. Yeah, I kind of am. Are those seatbelt straps on the chair? No, 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 no. It's just a gamer chair. I need something with good cushion. I need a new chair. Um, JD, my man. What else can we mention today that's worthwhile? Well, EIP 1559 launched, which is pretty cool. It's not as extremely awesome as people think. It'll take time to play out, but it definitely has a virality component associated with the news and the headlines, and it's probably totally responsible for the price action today. Um, I look forward to seeing if 0.382 holds on the weekly. If we hold above that on the weekly, that'd be nice to see. On the daily, if we hold on the daily, I don't really go down to the 4 hour and the 1 hour anymore. I don't have patience for that shit. um, W bottom sure as hell looks like a double bottom, which is a W bottom to me. That's pretty cool. Let's take a look at Bitcoin real quick for a second. Let's go down to the daily. That's a Bitcoin and M2. So there's clearly a heck of a floor right there. You know, not It's not anything significant, not like an inverse head and shoulders, albeit there is an elevation over on the left and the right, and it clearly ripped up. You need to see this. So this is a breakout, a retest. This needs to hold above the 200 EMA and print the higher high. If you see this thing go to 213, 14, 15, 220, let's go over to the dollar denominated and I'll give you guys some numbers. We'll wrap up the stream in a couple minutes. So, you see this thing break out to like 43. If you get the new higher high above 43, which will be above its previous failed breakout attempt, that's going to be a heck of a, that's going to be some serious awesomeness. Because that gets us above what is that, the 382? Yeah, that's the 0.382. So that'll get us above the 0.382 fib. It'll get us above the 200 EMA, which means we're basically above the long-term moving average on almost all time horizons. And you had the breakout, the retest, and the higher high. That puts us in a very bullish position. You know, um, you know, Here's the kicker. And in conclusion for today, you can have an extremely bullish looking chart, and then you have a macroeconomic time bomb go off. So that's very real. And it's something to always consider. It doesn't mean to be fearful. It doesn't mean to not engage with markets. It means to be properly allocated, to have enough liquidity, like free cash to pay your bills. You always have your hedges of hedges of hedges. So for me, I have 10 years and I keep most of my checking account denominated in 3-month T-bills. And gold's like right in between. Gold's interesting because um, it's not really responding very well to inflationary pressures. Maybe because it's entirely manipulated by the paper gold market, but that's besides the point. But what's nice about gold is that it's physical. So, like, if there's an electrical issue, or and for any reason you have literally a piece of metal that anyone will see and they'll be like, "Whoa, that's awesome," and they'll pretty much give you stuff for it. And like that's maybe like an apocalyptic type scenario, but um, we fall back to the barter system in that type of scenario, and gold is a tangible asset, and that's meaningful in its own right. How it responds to the macroeconomic climate and financial conditions is another story. So it's definitely not hitting the sweet spot that crypto assets are. They're just so frictionless and global and transparent, and that's why it's doing what it's doing. But gold still serves its purpose. It's a physical asset that has demand, and that's meaningful. So that's the name of the game. Let's wrap up the stream. Thank you, everyone. As always, 30 people in the stream, 19 likes. We can do better. Thursday, August 5th at 12:03 p.m. Tell everyone to subscribe. And as always, I will see you again tomorrow. Peace.